We are calling the year 2021 as a year of imagination and fascination. Fascination given what's happening in the digital world, and imagination given how new and new asset classes have got created. But whichever way I look at it, 2021 has been a year of fantastic returns. What is in store for 2022?
That's a great, and the most apt question to start this conversation. And I think the longer term India is always positive because it represents tremendous and secular growth. And one year, we have experienced it time and again, is always a challenge to take a view on. But I would still have a positive bias on the markets. And the reasons why I think returns should be positive over the course of this year. I think one, the valuations are reasonable, and some people felt that markets have run much ahead of the economic growth or fundamentals. I think that's not entirely true. Markets are now keeping pace with the fundamentals, and that is reflecting in both the trailing 10-15 year returns, which is around 12-13% around nominal GDP growth. It is reflecting in PE multiples. Markets are trading close to maybe 18 times fiscal 24. And in about 6-9 months from today, we will all start looking at that. These are maybe 5-10% higher multiples than long-term averages. But given the improving growth outlook and also the quite low cost of capital, I think these are reasonable valuations. I think the most important reason for optimism is that the growth outlook of both the economy and of earnings growth has clearly improved. I think while COVID caused a lot of social pain, a lot of pain to low-income households, I think the economy actually has come out a winner through this very difficult time. The shift from Chinese manufacturing has accelerated. The China Plus One strategy is a clear focus. The government is supporting it by way of PLI schemes and various policy initiatives. The profitability across the manufacturing sector in India, paper, sugar, textiles, metals, chemicals, across the board, we have seen an improvement. Corporate leverage in India is between 10 and 15-year lows. So I think the outlook for private capex has also improved. And world over, including India, I think governments are giving high emphasis on infra capex. And I'm sure we know how infra investments in India are accelerating. The flow of PE capital into not just the listed markets, but all in the unlisted markets, the startups, the infra assets, I think it is again has positive implications for the growth of not just the economy, but specifically the infra sector. The corporate banks or the banks' corporate NPA cycle has clearly ended. And we used to discuss it for many years, it will happen. But now I think one can clearly say it is over. So the outlook even there is quite decent. So net, I feel quite optimistic going into this year. Though I must also add that the returns of the last 1 or 2 years, the very high returns were the result of an extremely low base and also extremely low levels of corporate profitability in India. Corporate profits to GDP had fallen in fiscal 20, almost 1.6%. Next year, we expect it to be around 4.5%. I think these very high returns of last 1-2 years, because of the low market levels and low levels of profitability, I don't think should be extrapolated. And I think while one should remain optimistic, I think one should have more moderate expectations from equity markets. And I think if I think slightly ahead, maybe 3-5 years, I think this is a compounding type of market, which is what equities are actually known for.